A very good evening, everybody. Welcome to the webinar, Finding Opportunities Following Recent Sell-Off in Hong Kong and Chinese Stocks. I'm Ming Hui from Fluid Futures, and tonight's session is held in collaboration with Trading Central. To kick things off, we have Ms. Dominica, who will be sharing with us a short introduction to Trading Central, after which we will hear from Trading Central Deputy Head of Research, Mr. Ming Lam, who will be sharing an overview of the current stock market situation and discuss trading opportunities for some popular Hong Kong, Chinese, and Singapore share CFD. Before I pass this on to the speakers, please be reminded that if you have any questions throughout the course of the webinar, you can drop them into the questions box and we will answer them during the Q&A session towards the end. And now over to you, Dominica.
Hello, everyone. Let me show my screen. Please let me know if you can see the Philip Futures MT5 platform.
Yes, we can.
Great. All right. So welcome, everyone. It's me again, Dominica from Trading Central. I believe many of you know me from the previous webinars. I'm here to give you, as usual, a short intro about the Trading Central services available on the Philip Future MT5 platform. First and most important, I wish all of you to know that all those tools are available for demo and live account holders. You just need to request your account manager to get the access to Trading Central tools. And then you're gonna need to install a special plugin on your PC, and it will appear on your MT5 platform on the under navigator window, here under indicators, and you're going to have two tabs. One is the Trading Central in the indicators, and the other one is the Trading Central in the expert advisors. So what's the difference? The Trading Central in the indicators are the set of different indicators, including our flagship Analyst View indicator. It's the one that you can see right now overlay on the chart. It gives you support and resistance lines and pivot point. Pivot is in blue, so you could easily find what are the entry and exit points for particular instrument, thanks to this indicator. If you want to have a clearer view of whole scenario, you can go easily to the toolbox and go to the news, and here in the news section you are getting the same reports as let's say the same support, resistance, pivot and preferred alternative scenario as overlay as a chart. You can read them for example as an article. You just need to double click here and you get the full report with the chart and the description below. Those reports are published by Trading Central analysts. We have 3 teams of analysts sitting in Hong Kong, in Paris, and in Ottawa. And they cover the markets 24 hours, 5 days a week. New reports for each instrument, like for major currency pairs, appear every 2 hours, so you can double check. There is always a stamp of the timestamp when a particular report was published. So that's one of the tools that is available for all of you. And the other one is under expert advisors. You just drag and drop, then you click OK, and then a small pop-up window will appear here, where you have 2 tools. One is a Forex Feature Ideas. It's a great tool for those of you who are maybe looking for the opportunities. So if you are not sure what you want to trade, you can do some custom settings here. And for example, put what kind of bar sizes you're looking for, holding time frames, and maybe which exactly technical indicators you're interested in. And this tool will search for 10 best bullish and bearish ideas. So it's based on the technical event and the pure technical analysis. It will find the specific events and it will show them on the chart. So that's something, if you are looking for trading ideas, you could come to this tool. If you are looking for some additional validation, maybe you want to check the market buzz, where you can see, for example, on Forex future ideas, we see that, for example, this is a great opportunity here on Euro Swiss franc. We can search Euro Swiss franc here. Oh, sorry. And it will open the page dedicated to Euro Swiss franc. I will just extend the view. So here you can see the news and other indicators related to the specific asset. Here we are looking into the Forex currency pair. On the news feed, for example, you have all the news which are related to this specific pair. Here you can see how many publications were related to this pair in past 24 hours, what is the split in the news, is it positive, negative, orientation of the news, most discussed topics, and what was the news history volume and the market price on the chart. So that's one of the examples how you could use our tools. You can search for idea here. You can check what the market, the news are saying about this particular asset. And you can also double check what is the prediction of our analyst using the analyst views indicator or one of the articles published in the news section on the MT5 platform. So that would be it from me. Thank you very much for listening. And I'm now passing the microphone to my colleague Ming.
Hello. Okay. Hi, ladies and gentlemen, and friends of futures. Hi, I'm Ming Lam of Trading Central. Happy to be here once per month to share with you my view, my observation about the market. Okay, I'm happy to do so. And today I try to be very concise and to the point so that I won't take so much time from you, and you won't delay your dinner, and I won't take so much the time that you should spend with your family. Okay, so yeah, maybe some of you have already been with me for several webinars, and I'm Ming Lam. I'm stationed in Hong Kong, and I am an analyst with Trading Central. Okay, so my colleague Dominica is right on the proposing or promoting the sentiment software to all of you, and you should try. Why? Because sometimes you know that market sentiments, well, in the stock market, even though some companies they have very bad fundamentals, but when the market sentiment on this company is good, overwhelming, it will drive up the telecos, and there will be trends, there will be opportunities to make some gains, even though the fundamentals are not good. Okay, so I advise you also to try the market buzz to see what you can take from the sentiment It is an AI project, try to take advantage of the AI technology. Okay, now today it's very simple today. My webinar is divided into 3 parts. Okay, first of all, I will talk about what have happened to the Hong Kong stock, Chinese stock recently. Most of you, all of you will know that bad things happen. Okay, and second, I will pick out some stocks that are performing well amid this market uncertainty. And third part will be on some Singapore stocks. Okay, now most of the stocks I'm discussing today, okay, they have corresponding CFDs available with Philip futures. Okay, so this is the one I want to point out. All right, so I want to show off, or I want to take some credit first. In the past webinars, I repeat and repeat and repeat that we have to exercise caution on Hong Kong stocks or Chinese stocks listed in Hong Kong or Chinese stocks listed in the US. Why? We have policy influence. We have US-China relationship, of course, deteriorating, okay, worsening relationship. Okay, I will talk about this later in this webinar. Okay, now this is the slide exactly I take from our webinar in May. Okay, I pinpoint the policy influence. So, ladies and gentlemen, what happened recently? Okay, China, all focus is in China stock market, Hong Kong stock market. What happened? CSI 300 index, just like the S&P 500 in the US. This is for China, the China version. Okay, you see, we are on a downtrend, and you see the rebound during the year is not good. Okay, not sustainable, and we have a downtrend, and then boom, at the end of last month, July, we see a very sharp plunge, and in just a few days. Okay, Hong Kong Hang Seng Index, HSI. Look at this. For months, starting from late February, March up to now, we are seeing what? A very strong resistance. This one. We are seeing the Hong Kong index, Hong Kong Hang Seng Index, HSI, will keep trading in a range. And you know what? As an analyst or as an long-term investor trader, we have to look at range, this bouncing range, and the key level. Now, if you see this key level here, look here, 29,400 could not be surpassed for several months. There is something wrong. Okay, or if we break out on the upside, it will be a very strong rebound. But in this case, however, unfortunately, we are breaking to the downside, and you see what happened from the recent high to the low at the end of July. The index, this Hong Kong index, lost 16%. Of course, now we are seeing a technical rebound, but I can tell you, I'm not very impressed by this technical rebound. Okay, I'll tell you why later. And this is Hang Seng China Tech Index. It means it is it includes those big tech name, Chinese tech name, Tencent, Alibaba, all those big tech Chinese firm. Again, we are seeing a very strong resistance at this level, 8,900. Okay, we watch closely to see if it will break out to the upside or to the downside. And unfortunately, you know it is to the downside. Recent high to recent low, 21%. Okay. Now, what happened, ladies and gentlemen? It is very unfortunate to see that we have a number, not just one single or two, but a number of policy changes on mainland China, and those changes in policy just affect those big tech names. For example, suddenly the authorities say private tutoring companies, which is very popular in China. Okay, whenever you see private tutoring companies booming in one country, for example, in China or in Japan, you know that the original, the regular education system is not very good, right? And so these private tutoring companies have been very profitable, in fact. But suddenly, overnight, authorities say, hey, you are not going to be non-profit. What happened? And now this one, New Oriental Education, it is ADR, okay, American Depository Receipt. Is, in short, it is Chinese stock listed in the US. Okay, so now you see, I'm not going to write to draw any target here because it has plunged from upside to $20 down to $2. So to me, it is very difficult to have any further downside target, upside target. Okay, 90% from recent high to the current position, 90%. Okay, if unfortunately you are an investor in this company, frustration should be frustration. Okay. Okay, next. What is next? You know, Didi, the ride sharing apps company. Okay, quite big, and just like the Ubers. Okay, well, authorities asked this company to stop registering new users. Okay, for whatever reason. Okay, let's know security grounds. Okay, and then is apps scrapped overnight. Order to scrap. What happened? In fact, this is very brutal. I remember this stock was just listed at the end of June. Okay, just several days later, you see there is a bearish gap here, and the policy, new policy, or we say policy change, just pop out, and all of a sudden, from high to low, 60%. Okay. I haven't got any accurate numbers. I think some U.S. funds, U.S. investor also bought the IPO in the U.S. This DD Global in the U.S. Heavy loss. Okay. And then what next? We have some more new guidelines for food delivery platform. Who will be the victim this time? You guess? Yes, Meituan. Okay, listed in Hong Kong, and at the high, record high, back in February, 460 Hong Kong dollar, and then you see in July, from record high to low, 59 downside. Okay, and you see, those stocks I'm talking about now is posing a technical rebound, but I still recommend not to be very excited at this kind of rebound. Okay, there will be rebound, and there will be, well, sell the rebound. Okay, take care. And then what next? This time, the big border has been affected. I mean, Tencent. Okay, at one point, a Chinese newspaper, of course, official newspaper, said that online gaming is equal to spiritual opium. Wow. Tencent, Tencent has been the big brother of gaming, online gaming in China. Okay, so, and also in February, it went up to a record high, 775. But in the recent sell-off, the cumulative downside 46%. Okay, so I remember these stocks. This Tencent has been also, this Hong Kong stock has been also once upon a time, maybe 2017, 2018, it was named the king of Hong Kong stock, and every day, every week, every month, there's only one way to go for this stock price. It was up. Okay, now 46% from record high. Okay, so this is the background of the recent market sell-off. Okay, what I want to say now, look at this. Do you know ARK Invest? Okay, so this lady is called Kathy Wood, CIO, founder, CEO of ARK Invest. So this company has already sold off dumping Chinese stocks. I remember one word they use is uninvestable. Uninvestable. So so this ARK invest in disruptive innovation, where they are operating maybe four to five ETFs. There are ETFs on biotechnology, ETF on web internet. Okay, of course the ARKK, the biggest one ETF, and all in big tech names, and it has sold all those holding in Chinese stocks of their holding. Okay, so it is very I want to elaborate a little bit here. Okay, so it is an institute. Okay, they are selling Chinese stocks. So you know what, institution buying is very important in our observation of stocks, because when we notice institutional buying, we know that the stock will be pumped up. Okay, because they have big money. Okay, they move hundreds of millions of dollars or even billions of dollars easily. Okay, or if they sell a stock, and the stock will be on a downtrend, sure. And you know what? Now, after all these dramas, we say it is regulatory crackdown in China. All this drama, investors say, okay, I'm done, sell off. And this leads me to another topic. I want to elaborate a little bit more. Is that some Chinese stocks, you know what, have been blacklisted in the US. You know that? Okay, I have been talking about this quite some times in previous webinars. But some some audience members just ask me in the Q&A session or in email or in the afterward emails. They say, "Hey, what's wrong with that?" Well, if the U.S. people, U.S. institutions, U.S. investor are not buying, it's no big deal. We have Chinese buying, we have Asian investor buying. No. I tell you, what is the meaning of blacklisted stocks in US? Okay, if a stock, for example, a semiconductor stock in the US, or a company has been blacklisted by the US, first of all, US investor, retail investor, and institutional investors are not allowed to buy that stock directly. Okay. Second, that blacklisted stock, if it is included in an index, for example, MSCI Hong Kong index, something like this, if it is included in an index, those investors, institutional investors, they could not buy any funds tracking the index. And you can see that MSCI or FTSE, they just kick away some stocks, Chinese stocks, in times because they have been blacklisted or they have been delisted in the US. Okay. Number three, you know what? Stocks, US stocks or stocks in general could be used as a collateral for loans. If you apply for a loan, you have to put down some collateral. If that stock has been blacklisted, sorry, you cannot use that stock. Maybe it is worth, well, let's say 1 million. You cannot use that stock to be collateral. So the point is, if you see a stock blacklisted by US, well, you know that we are lacking institution buying, and that is big deal. Okay. Okay, let's move on. Speaking about ARK Invest, do you know which stock, US stock, which is the biggest holding of this ARK Invest US stock? Okay, you're correct. Tesla. Okay, Tesla, they are holding, I remember it should be 3 billion, if I'm not wrong, it should be 3 billion US dollar holding in this Tesla stock. Okay, I like this stock also. Let's have a look. Okay, you see, it has just come out from a downside triangle, come out from a triangle, and all this technical, wow, very good. Okay, at least I think it will go back to its previous high, 900. Well, you know what, Tesla. I try to let you know what I know about this company. It's not just a car company, electric car company, okay, EV company. It is also an AI company, and it is also a robotics company. Also, most importantly, it is an energy storage solution company. So going forward, I'm very optimistic on this stock. Should be huge upside. So I recommend, well, see if it consolidate a bit, time to buy. Okay, buy on the dip for this stock. All right. So now, say Ming, any opportunities in the Hong Kong market, even though we are seeing some funny thing regarding the policies. Okay, I try to dig out some Hong Kong stocks that could be, well, that could be worth a look. Okay, in fact I have been prepared this PowerPoint for 2 weeks, but all along the way I have to drop some stocks because they turn to the downside following the big market picture. to the downside. So the following several stocks, let's have a look. BYD, you know what it is? It is like Tesla. It is an EV company, okay, operating in China, okay, but it is selling to overseas also, and it is producing EV, and at the same time producing battery for EV. You know what? Recently, we can see it just comes out and merged from a consolidation state, okay, and then it's trending higher, advancing. Why? Because it has something to do with the company that I mentioned a minute before. Yes, there are a lot of reports saying that BYD is going to supply Tesla with car battery. They call it a blade battery, battery, okay, which is a very advanced one, more efficient ones. So BYD is going up. So I try to find this stock, the corresponding CFD on the Philip futures pages, but I could not find one. Maybe I overlooked something, or maybe they don't have this as a CFD at the moment. So maybe we will ask Philip futures to see if they can add this one. Okay, BYD electric cars. Okay, second, maybe you have not heard about this before. This one, Ganfeng Lithium, Hong Kong stocks. Okay, it is a Chinese company, but it is listed in Hong Kong, and you can find the corresponding CFD on Philip futures page. Okay, so what is lithium? And well, you can see this one is also connected with the previous two stocks I introduced. Yes, lithium is used for making high-grade battery. Okay, of course, also used in electric vehicles. So you see, currently it is undergoing a consolidation phase, but in other parts, I can see technicals are not very bad. Okay, not bad. And this stock configuration, well, is among the top, I can say among the top 5% in recent Hong Kong stock market. When you pull up any chart from the Hong Kong stocks, they are all mainly to the downside. Okay, so take a look. Maybe you try to dig out something more about this company, okay, this stock, before you make your decision. Okay, lithium for electric battery. All right, what is next? Well, this one is good. ENN Energy 2688 Hong Kong. Yes, you can find corresponding Philip futures CFD. Okay, have a look at this technical. I am very impressed by the technical of this stock. So, and this is the one or two stock that I have to recommend today. Consolidation breakout, consolidation breakout, consolidation breakout. Okay, and you can see the 20-day moving average is providing support at the moment. Okay, and also the RSI, relative strength index, is not pointing to any downward momentum at the moment. Okay, still bullish at the moment. Okay, well, ENN Energy, in fact, it is engaged in distribution of natural gas in China. In fact, it is not distributing everywhere in China. It focuses in city distribution of natural gas. So business is relatively stable, we can say. Of course, we hope that there will be no overnight policy change that will hammer this stock, right? So on a technical configuration, these stocks looks good. Anything else? CK Infrastructure. Okay, this is a company, well, managed by Mr. Lee, okay, richest man in Hong Kong, Mr. Lee. And we see that it has just broken about a downward bearish trend line, and it is, well, rebounding. Okay, RSI, not bad. Okay, in fact, it has just released half-year result, saying that the net income has been in the first half has been up 5%. Revenue is also up over 10%, and also most importantly, they increased their dividend. Okay, they increased their dividend. So fundamental, these companies' fundamentals are not bad. Okay. Also, the company saying is also saying that they are going to look for acquisition targets. Okay, very confident company, very confident. All right, so we go to the next one. Now, this one is a utility. I know that there is a big bearish gap here. Okay, why? Well, at that time, well, in start is early June, S&P, the rating firm S&P downgrade the rating on this company, on this stock. Okay, but now after 2 months, we are seeing the gap has been gradually filled up. Okay, it is a good sign, and we can see that the 20-day moving average has just crossed above the 50-day one. Okay, so we hope we are expecting a further upside. In fact, under this market uncertainty all around us, this utility, just like the ENN energy I discussed well, a minute before, well, these utilities providing downside support and not very volatile, and for defensive play, you can consider about it. Okay, so these are some Hong Kong stock or Chinese stocks listed in Hong Kong that I found out to have better technical configuration. Okay, so we move on to another area. Maybe you are more familiar than I am. Singapore Straits Times Index, STI. Okay, so we have finally turned bullish. Okay, so I remember 1 month ago an audience member asked me, "Hey Ming, you are bullish on Singapore stocks, Singapore bank stocks. Okay, why aren't you bullish on the STI?" Okay, I say, well, the STI still include other stocks which are not doing good at the moment. So we have been cautioned, but now we can see that the STI has remarkably make a rebound, and it is now up to the upper Bollinger Band. This is the upper Bollinger Band. It's a good sign. And also we can see the 20-day moving average has crossed above the 50-day one. Well, look at the RSI, very good trending. Okay, so now I can reply to that audience member. Okay, now I take your advice. I turn bullish on STI. Well, you know what? STI, 30%, 1/3 of STI, the market cap has been dominated by three banks, Singapore banks, which I'm going to discuss. The biggest one, DBS. Okay, needless to say, it is in a bullish configuration. Look at this. Look at this. It is still trading within an upward, or we can say rising, or we can say a bullish channel. This one. Okay, and we are looking for 32, 33 Singapore dollar for each stock. Well, in fact, you know what? The banks, those Singapore banks have been doing well in the past 2 to 3 weeks. Why? Why? Because the central bank, or I can say Singapore's monetary authority, has cancelled the dividend cap on bank stocks. Well, back in 2020, that is last year, the MA, Monetary Authority, it restrict the bank dividend to be only 60% of the previous year. But now, this year, those restrictions have been taken away, and investors are happy to get back to these bank stock, major Singapore bank stocks. Okay, first of all, you can see DBS doing well. Okay, in fact, DBS second quarter, you know what? Its profit in second quarter increased 37% year on year. Okay, the next one, OCBC, Overseas Chinese Banking Corp. Okay, you can see the technical is so cool. Okay, just like Tesla. And breaking out from a consolidation. We like to see that. So every day we scan hundreds of thousands of stocks. Of course, we use also AI program to scan all these stocks, and this should be in the top 10% of those good-looking stocks. Okay, so OCBC second quarter net income increased 59% compared to the last year period. Okay, so we expect it to go to the 13 Singapore dollar range. Do you agree? Okay, the next one, UOB, United Overseas Bank. I have been watching very closely this level, 26.84 Singapore dollar. Okay, why? Because it is its previous high. Whenever a stock has gone through a period of consolidation, blah 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 blah, and then it emerged to the upside and exceeds its previous high, 26.84. It is a very good sign. Okay, and sorry, I want to say some more about this stock. Mine is too fast. Yeah. Okay. This previous high, today's close. I don't know if it is today's close. I prepared this slides maybe 4 o'clock, something like this. I think the closing price should be more or less around this one. So if it break about the previous high, good sign. We are expecting these stocks to get into the 28 Singapore dollar range. Okay. Also, you can see 63 of RSI upward momentum. Okay, and we like to see breakout. As I told you, as I mentioned, we use AI program to scan all thousands of stocks, and it comes back with all kinds of breakout. And as technical analyst, I like to see this kind of breakout, just like the Tesla stock. Okay, all right. So the next one is a little bit exciting. This is the Singtel stock. Where is, okay, there should be one. Yeah, there should be one downtrend. 4 months. This four-month downtrend has been broken, just broken. Okay, you see. And Singtel why it has spiked today. And it's not just today, in fact, it has broken about this declining trend line several sessions before. Okay, but today we see a spike. Why? Because it has swung to profit. Okay, it's swung to profit in its fiscal first quarter result. Its net income come in as 445 million Singapore dollar. In the same period last year, it recorded a loss of 20 million. Okay, so sentiment, again, this is sentiment that drive the technical up. Okay, well, maybe we can dig into is fundamental to see Singtel's Australian operations or operation business in India. But so far, the company say the business there in Australia is adding to its profit contribution. Okay, and the company also say that operating and business environment has been improving from the COVID-19 restrictions. Okay, I know that, and just like the COVID-19 should be written in history as the most swing factors. Okay, and in Hong Kong, we have seen the restaurants closing due to lack of business under the COVID-19. Well, in Japan, we can see a lot. Well, in Japan, the tourism industry almost ground to zero. Okay, do you agree? So also in Singapore, I think Singapore should be better at the moment, right? You let me know. You let me know. And I used to frequently going to Singapore for work, for presentation, and I like this place. So you tell me what is the situation, the real situation in Singapore, okay, under COVID. And luckily in Hong Kong, the Delta coronavirus is not spreading seriously, luckily. Okay, so now this are those stocks that I want to discuss. Now, maybe, as I said, I will be concise. I make a conclusion, same conclusion. Yeah, similar, I can say similar conclusion to the conclusion that I made in previous webinars, because the big picture in our eyes, has not changed much. Okay, if you are still looking for opportunities in Hong Kong stocks, you should be very, very cautious. Okay, this one are still here, and the next one, US-China relationship. Let me spend two more minutes on this one. Well, since US President Joe Biden took office in January, up to now, 7 months. Okay, at that time, some people told me that, hey, Ming, you know what? Biden will be very different, opposite, 180-degree opposite to Donald Trump. And Biden will take away the blacklist of Chinese company, will eliminate it, will take it away, and the US-China relationship will be better off. Well, what is the result? No, you are wrong. You are wrong. The US-China relationship has not improved. In fact, in contrary, it has worsened. You know what? Biden has been sticking to the blacklist of Chinese company drafted up by Donald Trump, and he executed it. Okay, so and he will also add to the list. Okay, so a lot of people have got disappointed. But to me, I'm not surprised. I'm not surprised because, well, Biden is a very experienced politician. Okay, I can only say that. So Chinese stocks delisted in the U.S. in progress. This operation or this delisting is ongoing, ladies and gentlemen. Okay, and I don't hope. Well, you know what? I don't hope for a better relationship. It is not for me. I'm just a small analyst, small investor. It is not up for me to hope for any change in the political area. Okay, I just observe and I react accordingly. You know what? The US-China relationship has been worsening, and Chinese stocks continue to be delisted in the US. Then what? Then I will exercise extreme caution if I'm going to trade Hong Kong stocks or Chinese stocks listed in US and listed in Hong Kong. And that I call operation. It is not prediction. I repeat. Maybe I'd advise in those previous webinar. We are not in a business of prediction. Okay, we are in business of operation. We observe and then we react. Okay, what the main observation nowadays? My main observation nowadays is US-China relationship worsening. Okay, we will see more market uncertainty due to this point. Okay, so take care. And Singapore bank stocks outperform, as you can see, those big banks. And those big banks say, and in the latest report, that their loan losses have dropped significantly. Good sign. Maybe it is also good sign for Singapore economy, right? Now, still, I keep my stance, which have been used in all our previous webinars. We are still bullish on US stocks. Okay. And one area I advise you to have a look at tech and growth stocks. Why? So sorry for my being long guest. I give you the last chart and I will open up the Q&A. Okay. My last chart is this one. US 10-year Treasury Yield. Okay. Now, at the start of the year, we are seeing 1.7, 1.8, and people say, "Oh, come on, it will surely go to 2%." Okay. Even though, well, 2%. Even in 2019, before the COVID-19, we are at well, 1.9 something. Okay, but for the past several months, we are seeing this 10-year US Treasury yield drop, not increase, drop. Remember, drop. It means the bond market. You have to know that the bond market. You have to know that the bond market is bigger than the stock market, right? The bond market is expecting a slower growth in the future. Even though we are talking about inflation, the Federal Reserve is going to raise interest rate, blah, blah, blah. But we are seeing this key number, 10-year US Treasury yield dropping. Okay, and this one, this lower Treasury yield is good for tech stock or growth stock. Remember, at the start of the year, we see this yield rising, and we have a sell-off in or consolidation in technology stocks. Okay, now we see that this yield is coming lower, and I'm quite confident that tech stock will have a good one. because of this. Okay, so thank you very much. So anything I can help?
Okay, thank you, Ming. Moving on to our Q&A segment, our first question for the night is comparing ADR shares in US, Hong Kong H shares, and China A shares, which one has the highest investment risk and why?
Oh, good question. Well, China A stocks, I don't know if you can invest directly on China A stocks. Most investors will invest through. There is some mechanism between Hong Kong and China that you can buy some A stocks through Hong Kong, or most investors they would like to play with the A50 China index fund. Okay, so the most risk should be I would say the A stock A shares, because they are most they will be on the front if there is any damage from the policy change. And also I don't, but I do not think the difference will be much. Okay, the difference will be much. Look at Didi. Look at Didi Global. Just list on the US market for several days and it plunged. Okay, and now we are seeing now maybe this is a good point. The US SEC Security Exchange Commission, yeah, Equity Commission. So the stock regulators in US SEC is restricting the Chinese company to go for IPO in the US. Okay, so they are seeing something. They are seeing something, and this is why you have to exercise caution, even though those you are playing with ADR. Okay, well ADR, you know what? There is a higher risk. There is an extra risk, I can say, of being delisted. Okay, and well, just watch the US and China. It is huge. Okay, thank you.
All right, thank you. The next question is on your slide with the chart for Hong Kong and China gas. I think it's one slide before STI. Why is there a gap in January?
Good question. Okay.
Sorry, why is there a gap in February instead of January? Sorry.
February. Oh yeah, in February, this one, right? Yeah, this one in February. I did not follow it, sorry, and I did not follow it at the moment, and maybe I will find out and let you know. But you see, whenever it take a gap upside, and we see usually, you know what, for technical analysis, a gap. Okay, there is a bullish gap here. The following follow-up analysis will be to check if this stock will fill back this gap. Okay, so here in March we see that this stock refused to fill back this bullish gap. This is a very bullish sign, and then it break above its previous high here, and then it is a double bullish sign, and then we see the stock just blasting to the upside. So one point is to see if this bullish gap has been filled. No. Okay, second, we see this previous high has been exceeded. Okay, so this is the way we look at stock in a technical perspective. Okay, thank you.
Okay, the next question is, what's your opinion on China bank stocks that are listed in Hong Kong?
Good question. Good question. And you know what? I have been following also these stocks, and I'm very disappointed. And I won't. I try not to touch it because in other words, I won't consider at the moment. I won't consider buy even if it has plunged well 50%, 60% from its high. The money sector, you know, financial sector in China is it's a big deal. It's a big deal. If there is any policy change, just like those policy regarding big tech, and if there's any policy change for the banks, it will be investor will not be fast enough to react, and they will incur much loss. So I pull up those charts and those Chinese bank. Now, maybe excuse me for my saying that I'm not very impressed. Okay, so not at the moment for bottom fishing. Thank you.
Okay, the next question is, will China go into recession based on the policy changes?
Well, those policy changes are just, well, currently, so far, we are just seeing policy changes regarding big stock names. Okay, they are focusing on big stocks at the moment. Well, in fact, I'm not seeing China's economy to be hammered by those policy. You know what? Those policy in China are always changing. But back to the point that I keep talking about, I'm seeing if China's economy is to be impacted, it will be impacted by the result of the deterioration in US-China relationship. You know what? US recently has been getting closer with Japan and with what? India. Okay, so India is a competitor for manufacturing orders against China. Okay, you know what I mean? And also Vietnam and also other Southeast Asia countries. So they will take away many orders from China. Okay, this is the point I'm very concerned. So if India and Vietnam and other Southeast Asia countries are eating lunch at the expense of China, that is taking the orders, manufacturing orders from China, China will have some headache, I'm sure. Okay, not from policy, but from the international relationship. Thank you.
Okay, for the next question, someone is asking, do you foresee any regulatory imposes on online insurance and online healthcare stocks that are listed in Hong Kong, and what will be the impact?
Sorry, I'm not foreseeing any changes in this area. But you know what? From the recent policy change and its ghost dramas in China, we are seeing entrepreneurs or entrepreneurship are being in a very weak side when they operate in China. Okay, this is a whole business environment, not just one sector. So of course, the insurance sectors and those banking, well, as we mentioned, discussed before, the banking sectors, of course, there will be changes that you and I will not know in advance. Well, just like all those change in policies, it happened overnight. Okay, for example, the Ant. Do you still remember the Ant Financial from Alibaba? Alibaba. It was stopped. Well, it was designed to be the biggest IPO in a certain time, the biggest one, up to billions, several billions, and just several days before the IPO, well, the authorities just say stop it, and you cannot predict. The one I can predict is that those policy changes could not be predicted. Okay, well, black swan, it is a black swan for us, a small investor or analyst, but it should not be a black swan for some, well, higher up. You know what I mean? Thank you.
Okay, for the next question, someone is asking if you can comment on property stock in China.
Oh, thank you very much. Yes, property stocks, like bank stocks. Thank you. And well, you know what? I have done a lot of homework before I come up to speak. Property stocks, they're in a very bad shape. Like the Chinese bank stock, I will not be bottom fishing at the moment. Okay, they are, sorry for my wording, they are ugly. The charts are ugly. Okay, so have you heard about the Evergrande? The number should be double three for Hong Kong stock. Okay, they have some credit problem, and well, if you like to buy this kind of stocks, well, you have to exercise extreme caution. Okay, so don't make me wrong. I'm very bullish on China, and I'm very bullish on Chinese people. Okay, they are good, but at the current environment, and it seems the stock markets, particularly the Hong Kong and Chinese stock markets, are easily dampened, hammered by the sudden change in policy. So until we have transit to a relatively stable policy environment, I think we still have to, until then, we have to exercise caution. And if you like to still, you have like to buy some Chinese bank stocks, want to buy some Chinese real estate stocks, well, don't be aggressive. Don't be aggressive. Okay, this is what I want to say. Thank you.
Okay, relating to the previous question, how about the property stock in Hong Kong?
Property stock in Hong Kong, it depends. I recently linked with. Let me see if I can pull up a chart in link with. Can you see my screen?
Yes, yes, we can.
Okay, so there is a property stock, commercial property, linked with. Is it okay for you? So I talked about this stock before. Oh, sorry, this is this is Tesla. Yeah, this is REIT, REIT. Can you see that? Yeah, and not good. Before I was bullish on this one, seeing it is an uptrend, quite good. Let me join now. It's an uptrend here, but currently it has just well, cross below this uptrend. This is a real estate investment trust. Okay, it is all about shopping mall, car parks in Hong Kong, and you can see the environment is not very good. And those other big big real estate developer, for example, 16 Sun Hung Kee. You see, not good. If you know what, we are in trading, we are selecting the fast running horse. Okay. Again, I repeat, we are not in a business of prediction. So this one is certainly not a fast running horse. Okay, we have other. So why don't we look at other horses that could run faster, just like those I discussed before. Okay, and also in the US, Tesla, something like this. And don't bottom fishing at the moment. I advise not to bottom fishing at the moment, because your capital, your principal to buy those stocks may be locked up. Okay, will be trapped for some time. Okay, thank you.
Okay, thank you, Ming. And due to time constraint, we will pick our last question for tonight, and that is, what are your thoughts on Macau gaming stocks?
Macau gaming stock, very good question. Same as my view on Chinese banking stock and Chinese real estate stock. You see, well, in fact, the Macau gaming stock, first of all, the COVID is affecting tourism all over the world. Just look at Japan. Okay, tourism is down 99%. Okay, so and in Macau, it has another layer that is related to our Great China. Okay, if Chinese are getting wealthier, more money, they go to Macau gaming entertainment. Okay, but at the moment, we are not seeing that kind of recovery. Okay, so same here. I believe those Macau gaming stocks, Sands China, MGM China, their charts are not good looking. And same here, choose the fast running horses. Okay, well, until maybe this gaming stock will rebound and rebound to the upside and start a new trend. But until then, we have to observe, not necessary to put money in at the moment. Okay, thank you.
All right, thank you for that, Ming. We will conclude the Q&A segment here, and we received an overwhelming number of questions tonight. So for the questions we couldn't get to, we will respond to them via email. Yep, so
Sure.
This was a very insightful session. So thank you, Ming, as well as Dominica, and thank you very much, everybody, for your time tuning into this webinar tonight. We'll be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. And there will be a short survey that appears when this session ends. Do help us fill that in so we can serve your webinar needs better. And that's all for today. Thank you, everyone, and goodbye.
Thank you. Good evening. Bye-bye.